Good day, fellow investors. The title of this video is Stock Down, and are stocks a buy when those are down? This was started because there were 4 comments in a row on 4 different videos discussing whether TTCF, now penny stock, is a buy now, aluminum stocks that have crashed a little bit recently, revisit China stocks, and also PayPal that I said it wasn't a bargain at 126, now at 60, whether it is a bargain. So we'll discuss these 4 stocks in this video. Now, at some point, yes, every stock is a buy at some point. One story, one suggestion there is to check Enron. When it went bankrupt, the biggest trade, the best buy that was made, was somebody buying at 20 cents and selling at 80 cents to all the shorts that were crazily covering before it went delisted. So that was something of a trade. So at some point, yes, everything is a buy, but when it comes to investing, price is what you pay and value is what you get. So let's discuss businesses a little bit. Now, the question on TTCF, is it a value play now? Of course, maybe a little bit ironic question, but I really want to discuss something here. And that is investing on promises. So, tattooed chef, the company went public through a SPAC or reverse merger or whatever, and they really went on the train that was financing these new and hot and sexy food stocks. We had Oatly, we had Beyond Meat, and I hope the management sold the 50-60 million of stocks here and they banked on this, because if they didn't, then they just destroyed a good business by trying to create who knows what. But when you invest in promises, so now we have the artificial intelligence boom and craze. This was just 2 years ago, we had this food boom and craze. 4 or 5 years ago, we had the marijuana boom and craze. And for me, that is not investing, that's just gambling. And I think there was a YouTuber that likely lost a lot of money here, but that is because he gained a lot of viewers likely here when this was booming. I'm not following, so I don't know, but there were so many questions about TTCF in the past here with us. And yes, 100 was possible, but very, very risky, as I told you in the video, when the stock was trading at 20. So 95% down since, and I think I also discussed Beyond Meat and all those businesses that weren't making any money, Oatly, etc. And I think those all did pretty badly because it was just a bet on a trend and just people hoping and justifying stock prices going up and up, and that's not investing. The same case is now with artificial intelligence related stocks, software businesses, chat GPTs, etc. At some point, everyone will use it, therefore everyone will benefit. And yes, everything is very exciting when a stock goes up, but that's not investing. Now, Sven, you haven't analyzed the aluminum bigger companies in a while. Its price has dropped significantly. Maybe a good time to consider investing into it. Because the price drop doesn't mean anything to me. So we have Alcoa. This was the price when we first discussed it. Then it boomed because of aluminum prices going up. And then it went down. But it is still, let's say, on a historical cyclical average. You look at aluminum and other commodities in a bad recession. And then, of course, if you look at aluminum prices, now the bottom will likely be a little bit higher than earlier because of increased energy costs that you need to make this. But still, this peak is gone when people were expecting that these high prices and Alcoa will be making money forever. And now we are lower prices with higher inputs, which means then again lower profits for the long term. And you simply see the situation with the stock price being where it is now. It's still pretty high relatively to where it was. I hope they repaid a little bit of debt and all the issues that they had here when it was really, really ugly. But then again, to conclude, when there is a recession, I can tell you we will look again into aluminum companies. So now it is, okay, possible upside, but not that much, but significant downside. All right, Crane shares, the proxy for China. We bought here, I think, then we sold here for our YouTube portfolio. We did pretty well here. And now the trend is a little bit on the negative. There is this rebound here. I somehow missed for my personal portfolio the bottom here, but I wasn't far. You can check that on my research platform, not Crane Shares ETF, something else in China. But okay, I somehow hope that there will be another leg down and then that we see a Chinese stock rebound over time to make some money on this. Even if this still looks cheap, China still looks very cheap, of course, because of all the issues related there, the debt, the fighting around the world, etc., etc. So it is cheap for a reason. You don't have to invest in China. If you cannot watch it carefully, if you cannot stomach the volatility, there will be plenty of other businesses to invest, and there are also some European businesses also traded on the New York Stock Exchange that you can check on my research platform. But this is an outlook hard to predict. Where will this stock go? I would say now medium risk or little bit lower risk from a price perspective, value perspective, and good long-term reward, depending of course on what China does politically and how it, let's say, recovers from the current perspective that it has their issues. All countries have issues, so if you focus just on the issues, then you'll just see those issues. But you have to look at the long term. They are the biggest economy in the world, will keep on growing long term. So this should do, from this price perspective, should do okay. Now, PayPal Holdings, the stock price is at 60 now. Is it a buy? So, and this is a comment that I got many times over the last weeks, and the stock boomed again. People were looking at temporary benefits from the pandemic, everyone using PayPal, buying from home, and now we are even lower than where we were. So as we discussed in the video yesterday, PayPal is in the top 150 of the S&P 500, and I told you that I'll discuss it more in detail today. Let me just find it. Here we have, and this is the video that I made. Told you not a bargain, and the stock is down significantly. But here again, many of my research platforms now use Revolut for their internet payments. Not even Visa, not even that, but something else. So this is the key issue for me with PayPal. There is so much competition, so much money invested, so much technology that levels the field, and PayPal has high fees. And with those high fees, okay, they can make some money, but we are looking as customers always for something else, something that is cheaper, and net income is down, and their profitability model is in jeopardy because of the competition. As I said, as a customer, I want transactions for free, not paying high fees because of convenience. I want both convenience and free. And that is something that worries me when it comes to PayPal. Yes, they are growing there. They did still grow in the last quarter, but if they need to change their exuberant, crazy fees, then the whole business model is in jeopardy. And therefore, I wouldn't, maybe it will rebound by 100% in the next quarter or two, but I wouldn't touch it because I don't see it being there in 10 years. Something else will come. Somebody will go after this market cap of 70 billion to make it easier, faster, and everything. So to conclude, you never know where will the price of a stock go, but what you can know and focus is, okay, how much am I paying now for the value that I'm getting? Am I getting a business that is giving me already a good return, and it's very likely that it will double, triple in the next 5 to 10 years because it has some advantage, a competitive moat, not a promise, because it has something that is already there. So you are buying value, something that is already there, and that is investing. And if you chase those trends like artificial intelligence, yes, you might make your money, like a lot of you made money on Tesla. But then if you went to TTCF, marijuana stocks, who knows what, then you also lost a lot of money. You lost everything. And that's not investing, that's speculating. And the purpose of value investing is to constantly make money over time, because that allows compounding. For compounding, subscribe, check my other videos, check what I do. Thanks for watching, and I'll see you in the next video.